Hey everybody, welcome back to the channel. We are back with another episode of Daily Palantir. On today's show, we got two interesting things to discuss. Number one, we got a price target downgrade by UBS, which is a very popular financial institution, bank. I mean, most people in the world know UBS, from $44 to $8.50. Now, if that doesn't make any sense at all, don't worry, because it doesn't make any sense. We're going to talk about that and if that's even real. Second, we did get a price target upgrade 2 weeks ago that I haven't really gone through in depth today. I finally got the research note from someone, Argus Research, $29. I think they had some really good points inside of that research note for why they believe Palantir should be valued at $29. So we're going to compare the real upgrade that actually matters and then the fake one that still matters for a reason, but ultimately is not real. Let's get into it. Okay, so before we actually get into that, I want to do some quick looks at the stock because the stock action today, I actually think was really interesting. So we're looking right here, Palantir, you can see as 24.20 after hours right now. And on the day, it actually was up 1.34%, which is not a bad day. Now, look, we did fall from 26.61 a couple days ago or last week. So we bottomed here around 23.30. I thought today would be a tougher day for Palantir because of one stock that had an even tougher fall, NVIDIA, down about 7% if you include after hours on NVIDIA. However, Palantir went the opposite. And so there's a couple of reasons for why I think Palantir went the opposite. But before I get into that in terms of Palantir and NVIDIA, also Snowflake had a tough day, down another 2.35%. This one got to 128 last week and since then just been on a downward trajectory. And then CRM, Salesforce, this company incredibly important because kind of the gold standard in SaaS, and if they start slowing down, maybe some of these other companies start slowing down when it comes to SaaS revenues. Snowflake right here, 239, they're down another 2% on the day. So on another day where Snowflake and Salesforce are red, Palantir goes the opposite, green. And not only does it go green while Snowflake and Salesforce are red, because we've seen that a bunch of times throughout the past couple weeks, NVIDIA goes red, down 6% on the day, and Palantir goes green. So a couple points of analysis here. Number one, we've talked extensively over the past couple of episodes about why Snowflake and Salesforce going red and Palantir going green is nice to see. Not because we want those companies to be red, but we do want to see the market disassociate Palantir with regular SaaS, because Palantir is not regular SaaS. Palantir is, I think, one of the most important companies in the world. They have a huge government business that a lot of those companies, Snowflake, Datadog, etc., don't have. And they have an AI moat that is real. And if that market recognizes the AI moat, they're going to be willing to pay a premium. Some of that money might actually start rotating from the Snowflakes, the Datadogs of the world, into Palantir. So nice to see that Palantir is green when those are red. Number two, Palantir did fall with NVIDIA last week. So I do believe there was that correlation, right? Because when NVIDIA fell, Palantir ended up falling as well. However, today, it kind of feels more macroeconomic for why Palantir went green and NVIDIA went red. So when NVIDIA spiked up to 140, Palantir spiked up to 26. NVIDIA goes down to 119, you can call it, from the past 3 days. Palantir goes from 26 to at 1.2330. So, a relatively, if you look at both charts together, they went up together, they went down together. One could argue Palantir didn't deserve to be 2660 that quickly, right? Because there was no catalyst. One could also argue NVIDIA didn't deserve to go all the way to 140 because there really wasn't any catalyst. It was just a lot of hype and people buying up the stock. So they both did come down together. However, given Palantir was down, or given NVIDIA was down another 6% today and Palantir went green, I believe, and this is more macroeconomic versus just Palantir and NVIDIA, but I still think it's important to understand, maybe, just maybe, we are seeing breadth in this market. Now, you've probably been hearing this word a lot if you're listening to analysts talk about what does it mean to have breadth in the market. And what that essentially means is to see the market diversify. So IWM, small caps, for example, were up today, which was also surprising because usually when NVIDIA goes down and the market goes down, I think the S&P, the S&P was red on the day, 0.33%. Small caps get hit and they go down. Small caps, for those that don't know, the Russell 2000, the IWM, is an index for small caps. And when rate cuts supposedly happen, which I think we're going to get one or two this year, small caps can do better because they are highly contingent upon the cost of capital. So far, even though we've got really good inflation data over the past 2 weeks, which honestly could have been the reason why NVIDIA and Palantir went up as well. Some of the CPI and PPI data was very good, signaling that inflation is starting to come down. Small caps should also go up because if the rate cut's coming, then that's going to be good for small caps. In order to get the rate cut to come, you need inflation to come down. But small caps didn't move last week. In fact, they were flat, but today they were green, even though NVIDIA was red. So, I mean, the interesting thing to see about this and just to understand as we see Palantir is green as well, 24.22, is that maybe the market is selling a bit of their NVIDIA to start diversifying into things like small caps and into things like Palantir that you could argue, maybe Palantir doesn't deserve even more of a premium given Palantir is up 45% year to date, but some of that money is leaving the hardware AI infrastructure play and going into the software applications that is also rooted in AI, which is Palantir. Again, I'll finish off by saying this on price action. If Q2 earnings, which I believe in are about a month and a half, Palantir can show that the AI-enabled growth on their SaaS business is affecting the government side of the business. We saw they get the $480 million contract a couple weeks ago. And the commercial side of the business, growing closer to 45% year over year in U.S. commercial. And it's based on AI, meaning AI is a tailwind for them. It's not just regular kind of SaaS offerings, but it's rather fueled by companies wanting to procure their software because they're interested in how to implement AI throughout the enterprise, which is Karp's whole point. If you want LLMs to be useful, you need an ontology. Palantir has the combination of both of those together. Then I think the market's going to get really excited because the market's at least going to be like, all right, all these other SaaS names, we don't know if they're going to take off when it comes to AI. We don't know if the AI tailwind is really there, but for Palantir, we think it's there, and because we think it's there, let's give them a premium. So we'll see what ends up happening. Nice to see Palantir go green today. It also could just be green because the market is the market and Palantir wants to go green. But that's my kind of understanding of NVIDIA goes red, market takes a little bit away from NVIDIA, decides to diversify into other sectors from a macroeconomic perspective. That's good for Palantir. And also Palantir did get sold off as NVIDIA got sold off from 140 to 119, Palantir from 26.6 to 23.3. So due for a bounce. We had a little bounce today. Not bad price action for Palantir. Okay, let's get into the price target upgrade or downgrade that never happened. So this morning I woke up to a lot of surprises, quite frankly. In fact, the first surprise I might as well show everybody that is taking the time out of their life to watch the video, because even if you're not part of the market open or market close that we do every single day, you probably will get a kick out of this. I tweeted last night, why is Bitcoin tanking? And I woke up this morning to Andrew Tate, who has 9.5 million followers, saying because I'm gay. And he got 8,000 likes on that tweet. So if anyone wanted a good chuckle, Andrew Tate thinks I'm gay, which is why Bitcoin is tanking. Okay, so besides that surprise, another surprise that happened is UBS downgraded Palantir from $44 to $8.50. This was the official headline from MT Newswires. Again, didn't really make sense to me either, but it looks pretty official, right? Like when you see a headline like that, a screenshot like that, it's like, oh, UBS downgrades Palantir Technologies to neutral from buy, cuts price target to $8.50 from $44. My understanding was, okay, these guys probably upgraded us back in 2021 when everything was going crazy. They had a $44 price target. They didn't care about us for the last 3 years. Now, 3 years later, they're like, okay, now let's cut the price target because the company has changed. Apparently, this is fake. This is not real. UBS doesn't even cover Palantir. And someone manipulated a headline. They got it distributed through one of the news wires. It didn't go through Bloomberg. Bloomberg is a bit, and the terminal. Bloomberg and the terminal is a bit more specific, so it was hard to get it to come from Bloomberg. But we did see a fake headline and a fake downgrade, which is very, very interesting. Now, I said the amount of Haktua I would give to buy Palantir at $8.50 again would be astronomical. I'm not going to explain what that means. If you know, you know. But I don't think we're getting $8.50 on Palantir. And if we did get $8.50 on Palantir, it would be quite incredible. So this begs the question, why do you think, and I would love to know, put in the comments, that we got a fake headline on Palantir at $8.50 or a fake downgrade? I personally think, and again, maybe tinfoil hat that I'm putting on right here, but I mean, if someone's really willing to manipulate a fake UBS downgrade and get it through, you know, the news headlines and try to manipulate a community into thinking the stock is downgraded by a bank that doesn't even cover the company, they probably want some cheap shares. And so, I mean, the stock didn't even react to it, right? Like usually when you get a downgrade, and we got a downgrade from Brian White, that was another reason we fell on Friday. He said it should be $20. We got a downgrade, and he said something about valuation. And it's like, okay, so, all right, whatever. We got a downgrade by at least something that's real. On this downgrade, the stock didn't even really react to it. So it was kind of weird because it's like, if the stock is not reacting to it, and it's an $8.50 downgrade by a reputable firm, which is UBS, you would expect the stock to react, and it didn't. So the only thesis I have left, and again, I could be wrong on this, but the only reason someone wants to manipulate Palantir to make people think that it's worth $8.50 is because they would love buying it way cheaper than it is right now. And maybe they made up a headline to try to convince a bunch of people to sell if UBS, which is some important Wall Street firm, thinks the stock is worth much less than it is right now. It didn't work. The stock went up today. It was green. You know, like it was a fake. It was a fake headline. But the fact that it even became a headline, I mean, it's one of those things where you look back and you're just like, why are people trying to do this? And maybe it's because they want more shares. Okay, so that was a fake downgrade. Let's get to a real upgrade. Shout out to the person who sent me the Argus research report today. We finally have something real to look at in terms of a new update for a research post on Palantir. The last one we read, I think, was Mariana's at $28, which was a really good one, but it's been a while since we saw one of these. So I just have a few paragraphs I want to read through it. The full Twitter post I will put in the description if you want to read through the entire thing yourself. We're not going to go through all the numbers and valuation stuff because that gets more nitty gritty, but I want to read sort of the qualitative analysis for how they think about Palantir. It's less about the $29 target. I mean, the $29 target is fine. I care more so about why did this firm initiate coverage on Palantir, because 29, 30, 27, 28, I mean, like that number will change over time. What matters to me is what do they feel Palantir is offering? And so I want to see a little bit about their investment thesis and why they're excited for Palantir. Okay, so let's read from some of this. We are initiating coverage of Palantir with a buy rating and a target price of 29. While Palantir has long served the needs of the U.S. defense intelligence community, the company is expanding into the commercial sector with data management and analytics platforms capable of providing solutions to complex business problems. The company's government business generated 55% of revenue in 2023. While we expect this segment to continue to grow, the commercial business, particularly in the U.S., looks to be its future growth driver. Like many enterprise software companies we cover, Palantir is reliant upon new AI-powered applications to expand its business. Our long-term rating is also a buy. Now, the next sentence I thought was really interesting. Palantir shares are highly volatile and priced at a premium. So they're acknowledging that, you know, premium, overvalued, whatever you want to call it. They're acknowledging that, yes, it is a bit expensive. Although we also see Palantir as a highly differentiated software company. So, I mean, look, you could argue with 21% year-over-year growth, almost $60 billion market cap, that yes, there is a premium there. I don't think anyone can deny that. However, it's really interesting to see a new firm initiate coverage and say, even though we think it's a bit overvalued, the company's freaking cool. And this goes back to the cool factor that I've been talking about for a long time. It's like a cool company is going to get a cool premium. And when you have new firms initiate coverage, they're going to also feel that you deserve a premium if you're cool. Let's read a couple of other things here. So this is part, they just restate basically the slide deck from earnings. So that's why some of the number stuff is not that interesting. Okay, here we go. Go-to-market approach. Palantir's go-to-market approach is centered on its direct sales force of account representatives as it looks to expand both its client base and its wallet within its client base. We think this focus befits the highly complex nature of the use cases for Palantir software. I agree. Product focus is likely important to have something like a bootcamp versus a steak dinner or PowerPoint in order to sell software. Indeed, the company seeks out complex organizational challenges which dictate that it operates at the higher end of the market. However, it has also been expanding its channel sales and sales partnerships with hyperscale cloud providers to increase customer access to its software platforms. We saw the Oracle partnership last month. Since the launch of AIP, the company's looked to bootcamps or multi-day product seminars to demonstrate the capabilities of its software and to educate clients on the advantages and uses of its generative AI tools. It looks to sign 5-year contracts with clients, a rather long contract term with revenue recognized ratably, yet another nod to the complexity of its solutions. However, Palantir is open to shorter contract terms and clients can cancel contracts for convenience. They do allow you to pay as you go. And we know this from various clients that have said they can do that. In 2023, the company reported a dollar-weighted average contract duration of 3.4 years. In 4Q 2023, the company won a contract with the UK National Health Service for £330 million, consumption-based, which was consumption-based. We see this win as an evidence of both expansion into international markets and flexibility as to the type of relationship the company is willing to have with its clients. The company has $3.9 billion in cash, no debt. Operating lease liabilities were $217 million. Their trailing 12-month free cash flow was $622 million, up 80% from Q1, and they're expecting about $800 million to $1 billion in adjusted free cash flow. Now, the other part I want to read. So that part was really important because basically they believe in their go-to-market, and it's very important for a Wall Street firm to believe in your go-to-market because if they don't believe in your go-to-market, they don't think you're going to sell your software. They believe that the boot camps are a new and differentiated way to sell Palantir software, which is a very complex piece of software. So I like that they highlighted that is something they like to see versus something that they're scared about in terms of their go-to-market, because other firms maybe wouldn't like that they're doing boot camps, but it seems like Argus definitely thinks this boot camp methodology is not bad. Okay, let's read a little bit from some of these risks. Palantir is subject to the usual risks of fast-growing tech companies. It must effectively manage its current high growth and subsequent transition to a period of slower growth while also building out its product portfolio and field sales force. The company will likely continue to invest heavily in R&D and it's scaling its marketing efforts, which may not reproduce the expected returns. It must also ensure the security and reliability of its service platforms. Palantir seeks out large and complex data projects and use cases which both lengthen and make its sales cycle highly variable. These factors could impact revenue growth in a particular quarter, causing the company to miss its own consensus forecasts. The highly complex nature of its solutions also increases the risk of failure. One point on that is that Palantir hasn't missed in earnings in the past 6 quarters. Now, they beat, I think, 3 quarters ago by 1 million, which is it is a beat, even if it's by 1 million, but they haven't missed in the past 6 quarters. Palantir also has client concentration risk. Its 3 largest customers accounted for 18% of revenue in 2023. With the majority of its revenue derived from government sources, Palantir carries risks associated with uncertain government budgets, spending levels, and changing spending priorities, regulatory, and policy goals. These risks are somewhat balanced by the highly critical nature of the work of some of Palantir's customers, such as the U.S. Defense Department and intelligence agencies. Palantir has clear ethical guidelines around privacy and civil liberties. Basically, this part of the report is, saying this whole black box stuff is stupid. Through the sensitive nature of its work for certain government agencies in the U.S. or abroad, which could lead it to become involved in scandal. So they're acknowledging, yeah, they have clear ethical guidelines, but also it could result in what happened in 2017 where they got involved with the Immigration and Custom Enforcement, and that results in bad PR. The company's government business is limited to close U.S. allies that could be considered either constraint or business development or a risk-limiting strategy. Palantir does not do business in China. And as almost all of Palantir's revenue comes from subscriptions to its software platform, any bugs in the software implementation difficulties could hurt customer retention and weigh on the company's financial outlook. Now, we've seen this with Snowflake. Snowflake's getting mollywopped because they didn't have two-factor authentication on some of their clients' data, and some of it got leaked. I don't think that would happen to Palantir, but if that did happen to Palantir, oh my God. I mean, the media is letting Snowflake off with an easy one. If that happened to Palantir, the amount of bad coverage we would get. So that is a risk for Palantir, but because they actually have two-factor authentication on their clients' data, probably not going to happen. The company invests heavily in R&D and is expanding internationally. R&D is running in the high teens as a percentage of revenue, well above the mid to low teens or lower rates of many other tech companies. And that's because Palantir doesn't do acquisitions, which is why they do their own R&D. Palantir operates in an industry with considerable patent and intellectual property development and faces a range of IP-related risks. In particular, adverse rulings and patent infringement cases could force the company to design patent workarounds, abandon certain technologies, or pay confiscatory license fees. These additional technical and legal costs have a substantial negative impact on the company's results. Final thing on valuation. Our valuation methodology is multi-stage, including peer analysis and a multiple analysis matrix applied to our proprietary forecast and discounted cash flow modeling. Palantir shares have traded between 13 and 28 over the past year and are currently above the midpoint of the range. According to Bloomberg, the shares are up 39% year-to-date compared to a 13% gain for the S&P, a 24% gain for the S&P 500 IT sector level 1 index, and a flat performance for the iShares expanded tech sector ETF. Palantir's lagging EBIT enterprise value over revenue of 21.2 is just above the average for a historical range of 19.7. On a forward basis, Palantir's EV over revenue multiple of 16.8 is well above the peer average of 6. That's where you get the overvaluation. However, we are initiating coverage of Palantir with a buy rating to a target price of $29. So overall, not a bad argument by Argus Research in terms of this valuation, and I think it makes a lot of sense at the end of the day. For a couple of reasons. Number one is that they're acknowledging, look, even though Palantir is a little expensive right here and it's historically above some of its peers, there is a unique moat in Palantir, which is the government business that's outlined in this report. And again, you can read the full report. I'll put in the description. And the boot camps, which are a tailwind to continued growth based on the backs of AI. So what Argus is saying is like, hey, we think this is a highly differentiated company. And look, I don't know how smart the analyst is for Argus Research. I don't know if he spent years and years studying Palantir and months studying Palantir. I don't think he cares that much. I think it was on their radar and they officially decided to initiate coverage. So I don't know how much they know about Palantir. But it is telling to see that the analyst comes out and says, it's a bit expensive, but we think it's cool. We think the government part of the business is very sticky, even though there's like PR risks that are associated with that. They won this NHS contract for £330 million, $480 million, which is pretty cool as well. They're doing 1,300 boot camps, and these boot camps are leading them into these almost 3.5-year contracts with these clients that are getting to use their product. And they're growing above 20% with the potential expectation to grow closer to 25% over the next couple of years. $29 doesn't seem that crazy. That would put it at 65 billion market cap, roundabout, a little bit above that. Maybe 67, 68. So buy the stock. I mean, like, and again, as analysts tend to research companies and get deeper into the positions, one of the things I liked about this analyst report is that they talk about the government business. Remember, I talked to Mariana a couple months ago at the AI Expo event that Palantir was at, and I asked her, she's the Bank of America analyst, why does JP Morgan have a $12 price target and you have a $28 price target? And she said, Amit, the JP Morgan guys, they don't care about defense. They only care about software. If you value Palantir just as a software company, yeah, it's overvalued. If you value it as a defense software company, then there's a whole part of the business that adds a lot of value, that adds a very large moat, and that's very sticky revenue that's probably not going away that the other companies don't have. So if you look at the landscape with Argus and Bank of America and Dan Ives and how they're thinking of Palantir, even Jefferies, I think, has a price target of like 23, 24 bucks. The core argument is that, yes, it's a bit expensive compared to relative software peers, but those relative software peers aren't growing the way we thought they would grow, a la CRM and Sales and Snowflake. And Palantir is differentiated. So if Palantir is differentiated, there's an AI tailwind. They're actually growing, and they're on a trajectory of re-accelerating growth. These boot camps are a phenomenal go-to-market, and the other software companies, we don't even know if there's an AI tailwind or an AI moat associated with them. Why the hell is our money there? Why are we not betting on Palantir, even if it's a bit, quote-unquote, overvalued? And that's what was exciting to me about this research report. And it seems like Argus at 29 bucks is not a crazy number given the industry average, I think, is right now 24, 25 that we have right now on the street. So good stuff. We got one fake downgrade. We got one real upgrade. And I guess we'll see if we get more real upgrades in the future. Thank you guys for listening and watching. Hopefully you enjoyed. Let me know your thoughts in the comments on what you thought about this upgrade. I'll see you guys in the next one.